Hello, this is Lance Zimmerman and welcome to the Cattle Facts Closing Bell for Friday, April 8th. Today's top story, record high drop credit prices. During the last 2 weeks, a few Cattle Facts members have asked us to explain the record high drop credit price featured on the daily market outlook and analysis emails. The drop credit, also referred to as hide and offal value, is a composite price for those items that don't sell as whole muscle cuts from the carcass. The value is provided by the U.S. Department of Agriculture, and it's based on live steer weight and expressed in dollars per hundredweight. The value is calculated from 16 different items, and hides represent around 50% of the total value. Tallow, meat and bone meal, oxtail, and livers generally round out the top 5 items in value. The drop credit's been between $6 and $10 per hundredweight over the last 15 years. Due to the relatively large value placed on hides, the figure is influenced by global leather demand. Leather prices dropped substantially during the recent recession due to declining demand from automobile and home furnishing sectors. The drop credit declined as well. By March 2009, it reached a 20-year low of $5.59. This week, the drop credit reached a record high of $13.63, an improvement of nearly $3.50 from 1 year ago. With Fed prices around $123 this week, hide and offal values account for around 11% of Fed cattle prices. The drop credit's an important indicator for profitability at the packing sector. Recently strong cutout prices and record high drop credit have given packers positive margins during a time of year where they struggle to stay profitable. Now for your weekly market summary. There was moderate volume in the Fed cattle cash market this week. Live cattle sold from $123 to $125, and dress sales ranged from $195 to $198. Prices were $2 to $3 higher on Wednesday in live cattle trade in Kansas and the Southern Plains. Trade was noted in Colorado, Nebraska, and Iowa yesterday, with dressed prices $1 to $2 lower. Boxed beef volumes were down slightly. Despite weaker end meat purchases, prices were steady to higher. The cutout improved around $3 early in the week, and those prices pulled back $1 by Thursday. Feeder cattle values were even to $3 higher, and the feeder index reached an all-time high at $136.03. Sale volumes are light, but calves were quoted from $2 lower to $5 higher on the week. Slaughter cows were mostly steady, but prices were still at high levels. This morning's USDA crop production report surprised industry analysts. Stock-to-use levels were expected to be adjusted roughly 0.5% lower based on news from last week's grain stocks reports. Instead, stocks-to-use levels were unchanged. The report adjusted for corn for ethanol production by 150 million bushels higher, while feed and residual use was lower by the same amount. The result was an identical ending balance. The report forced corn futures to open 10 cents lower. However, the prices recovered within an hour, and corn prices ended the week steady to slightly higher, but remained more than $1.50 higher than the lows 3 weeks ago. Thanks for watching, and be sure to visit cattlefacts.com for the latest market news and analysis.